To Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Mike Sokol. He's the senior managing director on Nasdaq's market intelligence desk. We're going to take a look at S&P 500 1% moves by year. But before we get into that, Mike, let's talk about today's market action. You would think it's a completely different story than we saw yesterday.
Yeah, yesterday was all about the ISM number, first trading day in September, which led to talks about tariffs and so forth. So it was just kind of a negative tone. Today we're getting a reprieve, the news out of Hong Kong, which is what really is driving it. They're withdrawing that proposed extradition law, so that helped the Hong Kong stock market move up 4%. Europe was up, and that in turn rolled over to the US. So we're getting some positive feedback there, and then also hard Brexit looks like it's at least pushed out a little bit. So even though the US narrative hasn't changed, the international news has helped us at the margin move higher.
Do you think the Hong Kong news can help mitigate some of the pressures that we're seeing with US and China in terms of trade talks?
I think so. It's a complicating factor. So, for example, if some people would say, well, you shouldn't be really working with China if they're going to crack down. And so if that's off the table, that gives you another chance at the margin to work with them and hopefully get something going on trade.
All right, let's take a look at our first chart here. This is S&P 500, 1% moves that we've seen by year. What's the significance of this chart?
So a couple of different things. I mean, on a year-to-date basis, on the far right, you'll see we're not too far off of where we've been in the past. 2017 was abnormally low in terms of volatility, but 18 last year was about normal. So, you know, having some 1% moves is pretty healthy. But if you zero in on August of 19, you'll see there's been 11 moves of 1% or greater, 4 down and 7 up. And that compares to none last August. So we did have volatility come back into the market. The problem with this August is that of those 4 downward moves in the blue, 3 of those were 2.5% down or greater. So when you have 800-point moves in the Dow and things like that, it gets people nervous. And even if you have some 1% moves up, usually if you're trading, 500-point losses for 300-point gains, it doesn't add up. So you had a down month overall.
Yeah, well, I remember August 2018, there was virtually no movement in the market whatsoever. It was nearly impossible to trade. It seems as if we are on somewhat of the run rate that we saw in 2018 overall.
Yeah, I think if you extend that out for the full year, we'll be right about back where we were. The question is, you just don't want a lot of 2% moves if you can avoid it.
Well, it's been really interesting. If you look at some daily volumes on individual volatility, ETFs and ETNs, you'll certainly see that pick up again.
Yeah.
Let's take a look. We'll take a temperature on this sector. This is the GIG sector year-to-date performance, the 11 sectors that we follow.
Yeah.
Not a surprise that you see utilities up.
That's exactly it. It ties into the volatility that we saw. If you have downward moves, people get out of stocks, but if they are in stocks at all, they want to be in something safe or that pays a dividend. So you see right at the top, utilities, REITs, and staples were the only sectors in the green and led by utilities and REITs, so income-paying stocks. And down at the bottom, energy, crude was down a lot for the month, but also, for your financials, and even in the middle, technology, pretty much across the board. If you weren't in a safety area, you were down for the month.
But technology, though, still the winner, 28% up year over year, probably a little bit more today.
Yeah, it's been the winner since the election, really, and it's the driver for the market, and all your big cap stocks are there. So if you really want the market to move forward, technology, and to a lesser extent, communication services, which is Facebook and Google, because they move things around, you need those two sectors to outperform in order to move the market.
Which is so interesting because they also have a lot of exposure to US and China tariffs, not only on the product perspective, but just because of our relationships and the way the supply chains and so forth work. So it's interesting to see how they have continued to outperform as we become more of a services economy versus a manufacturing economy.
Totally. I mean, we're much more services focused, and so you just need those stocks to outperform in order for the market to outperform.
All right. Well, let's see what next week brings. Thank you so much, Mike, for joining us as always. And thanks for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.